Today in this video, I want to share with you this amazing trick of how you can use the Heiken Ashi and the RSI combined indicator to make this profitable trading strategy. And as you will see later in the video, this trading strategy is very profitable and gives you high win ratio. So without any further ado, let's get started. So first of all, let's go ahead and add the indicators that we're going to need for this strategy, and we're going to go towards the indicator tab, and here we're going to search for Heiken Ashi RSI, and we're going to add this indicator by J. Rogers to the chart. Now once this indicator is added, and before we talk about the strategy itself, let's go ahead and talk about how does this indicator work. If we go towards the indicator settings, we can see here that there are multiple inputs that we can give the indicator. First of all, there is the Heiken Ashi RSI candles, and if we increase the length of these candles, you will see the length of these will also increase. So if I just go ahead and let's say change this to 30, then we'll see that the length of these candles will also increase. As you can see here, now the lengths of these candles have increased, and you can see the price action is responding to it more slowly than it was earlier. And if I just go ahead and change it to let's say 5, then you can see that it will become more sensitive to the price action in the market, as you can see in this case here. So for our case, we're going to change this to 10, and here we can see that this is the smooth swing of the candles, and we can change this to 5 for our strategy. And here we can see that there is another setting of RSI plot. We're not going to change this, but this is the RSI length that we can use for our indicator. And there are a bunch of other settings as well, but we're not going to mess up with these. And inside here, we want to uncheck the RSI histogram and everything related to RSI shadow, RSI overlay, and all these lines as well. So once this is done, let's hit OK, and here we can see that we're getting this nice and clean Heiken Ashi chart. Now the way this Heiken Ashi is working, as you can see here, there are the overbought and oversold conditions, and this is just working like the RSI normally would. So the upper red here is the overbought area, and this green here down below this candles is the oversold area. And as you can see, the candles are moving about this zero axis, which means that if it reaches this area, that means that the market is oversold and there is a possibility of a trend reversal or a pause in the bullish trend. And if the market reaches this green area here, that means that now the market is oversold and there is a possibility of pause in a bearish trend or the trend reversal in the bullish direction. In addition to these overbought and oversold regions, there are the extreme overbought and oversold regions above this 30 and below this negative 40 as well. That means that whenever the price action goes into these areas here, we can see that there is definitely a change in the trend. For example, we can see that price action is reaching this extreme oversold area, and that's why here is the change in trend from this bearish to bullish. And similarly, if we look here, we can see that the price action is reaching this extreme overbought condition. That means that no more buyers momentum is prevailing in the market. That's why there is a change in momentum from this bullish trend to this bearish trend. So this is how the Heiken Ashi RSI indicator works. Now let's talk about the trading strategy that we're going to need for this indicator, and for that, let's go ahead and add the indicators that we will use. So the indicators are the exponential moving average, or EMA, and we're going to add this one by TradingView. And another indicator that we're going to use is the volume indicator to make sure that there is enough volatility in the market when we go ahead and look for any trades. Now let's go ahead and change the settings of this EMA and volume indicator, and inside the volume EMA, we're going to change this length from 9 to 200, and also we're going to increase this line thickness and change its color so that we can see it a little bit better. Now this indicator will give us the volume, the exponential moving average of 200, and this will give us an idea about the overall trend in the market. For example, whenever the price action is going below this yellow line, that would mean that the market is in overall bearish trend, and if the price action is happening above this yellow line, as we can see in this case here, then that would mean that price action is in the bullish trend. And now let's go ahead and change the settings of this volume indicator, and we want to increase this MA length from 20 to 30, and also we want to display this exponential moving average onto the chart, and we're going to change its color and increase its line thickness as well. Now all the indicators that we're going to need for this strategy have been applied, and let's go ahead and talk about the rules for taking long and short positions. So first of all, let's go ahead and talk about the trading rules for taking long positions, and the rules are as follows. first of all, the price action must be happening above this EMA line. As we can see here, that would mean that the market is in overall bullish trend. And the second condition that we need to check is that price action must be in the oversold area here. That would mean that there is a high possibility of a trend reversal in the bullish direction. And the third and final condition that we need to pay attention to is that the colors of these volume bars should be green. That would mean that there is enough buyers volume and we can go ahead and take this position confidently. Once these three conditions are met, we can go ahead and take a long position at the close of this candle here, and we'll be putting our stop loss at this last swing low, and in this case here we'll be targeting 2:1 ratio. So let me just go ahead and set our take profit level, and if I just forward play the market, we can see that our take profit level has been hit, and this is a profitable trade of 2:1 ratio. Here we can see another example of a long position. For example, here we can see the price action has been happening above this EMA line, but here the market pulled back into this EMA. But with the formation of these green candles, we are confident now the market is again in bullish trend, and with the formation of this movement where the price action is happening in this oversold region, we are very confident that market will move in the bullish direction. And here the volume confirms our signal as well, so we'll go ahead and take a long position at the close of this candle here, and we'll be putting our take profit level up at 2:1 ratio, and we'll be putting a stop loss at the most recent swing low. And here we're going to set our take profit level, and if I just forward play the market, we'll be able to see that if our take profit level has been met or not. And as you can see here, after confirmation of the signal, the market gave this very big impulsive move, and our 2:1 ratio take profit level has been hit. Now let's go ahead and talk about the trading rules for taking short positions. And the first rule is that price action must be happening below this 200 period EMA line. That would mean that the market is in overall bearish trend and we are good to take short positions. And the second condition is that the market or this Heiken Ashi candles must pull back into these overbought region, which would indicate that there is a high possibility of trend reversal in the bearish direction. So here we can see that the Heiken Ashi candles have been present in this area here in the extreme overbought conditions, so there is a high likelihood of market moving in the bearish direction. And the third and final condition is that there should be high enough volume of the sellers that confirms that our signal is going to be valid. Now once these three conditions are met, we can go ahead and take a short position at the close of this candle here, and we'll be putting a stop loss above this swing low. And again, for this trade we'll be targeting 2:1 ratio. So let me just go ahead and set our 2:1 ratio level, and if I just forward play the market, and let's see if this 2:1 ratio gets hit or not. So let's just forward play the market, and here we can see that our take profit level has been hit on this candle here, which means that this is a profitable trade of 2:1 ratio. So I hope you were able to understand this very simple yet very powerful trading strategy that you can make using the Heiken Ashi and RSI candles. And if you have any questions regarding this strategy, please make sure to comment down below. Also, don't forget to like, share, and subscribe. See you in the next video.